Hello viewers, in this video we will discuss oil market and recent moves in oil. Why? Because in the early April, OPEC Plus announced surprise oil cuts and consequently oil went from $75 to $80 almost instantly, and everyone was expecting some further trend. Let's see what financial markets are saying about that. I will quote, "Oil prices soared after OPEC Plus announced it was slashing output by 1.16 million barrels per day. They will begin at May and run at the end of 2022. Saudi Arabia announced, saying it was a precautionary measure targeted towards stabilizing oil market. And then we will say that yes, oil prices increased by 6% in one day, and there are picture with Russian energy minister. So that was because Russia already decreased oil production by 500,000 barrels per day due to the fact that they have been heavily sanctioned. And here is quote from analysts. OPEC Plus plan for further production cut might push oil prices toward $100 per barrel mark again, considering China's reopening and Russia's output cut as a retaliation move against Western sanctions." And what has actually happened? That was early April, right? But I would say decently long enough time has gone to say objectively whether these cuts have worked. But no, it's not. If we had cuts in early April, now after several weeks, oil is at same levels. Where are effects of sanctions? There are no effects of sanctions. Here's one also interesting thing that here's, for instance, headline: oil demand is hitting record levels and we aren't investing enough in supplies. That quote was made in April 17 by founder and director of research at Energy Aspects. You see oil prices here, right? You heard the quote, right? You saw the news about OPEC's cut, and you obviously know the fact that Russia is banned from European market, its key market, and it's forcing to sell its oil at huge discounts around the globe. But in all this world, oil went from $123 to 70s in spite all this. This is question for you about trading and financial markets in general. Major oil producers, major players in energy markets are claiming that there is record demand that has to be being cut in production because prices are too low. And actually the war is happening in world's largest energy market. Prices don't care. Why? Truth? No one knows that. But one thing I know for sure is that markets is not playing in the short term by the logic we all perceive. Markets are some sort of bluff game. When everyone thinks one thing, something else is happening. If you use logic like that, you might make some sense out of the markets, because otherwise by logic you will have to think that oil has to be worth at least $200 because of war in Ukraine, and then even that didn't play out that well. Now we have to think oil will go to $150 because of the oil cuts. At least major oil producers with the best information and the best access to information think that. And it's all useless because we see that it clearly doesn't work. And here's the thing, for us, for traders, for those who are not institutional players and doesn't have to budget oil prices for next couple of years and to be in very uncomfortable positions to do that, what we can say? We could say that we don't care, because we see that markets are going at a downtrend when the war is in full heat. Markets continue to decline here in November and December when first batch of sanctions against Russia came, and then in the, I would say, February, I think, the other package of sanctions in Europe started to come in place. Oil continued to fall to $66. Like, what? Okay, Brent oil is slightly higher, but they still correlate together, so the idea will be the same. By the way, this is West Texas Intermediate, not Brent oil, but picture will be the same. And when OPEC even announced that they will make huge production cuts, proportionately they are huge cuts, markets went to same levels as they are. I cannot say that it would go to this like for next year and oil wouldn't rise. Absolutely not, because there is large possibility to do that. But still, what does it tell us? I don't know. Actually, I don't know, and I don't bother to tell, because as a trader I always say I don't know nothing. I just react to prices and manage risk. And in that way, you could be prepared for these eventualities and uncertainties. 100 times better if you were just simply blindly trying to be smartest guy in the room, because it's impossible to do that. Now, one theory might be true here is that Russian oil is sanctioned to $60 per barrel, and all other markets are sort of converging to that price. So if they know that major exporter will be tied to that levels, everyone else might go along close to these prices. I don't know. That might seem only one of examples as an answer, because there really is not that much of the logic. Because if I would ask 2 or 3 very competent people in this industry what happens in oil, I will get 3 diametrically opposed answers full with facts. So I don't want to bother to do that. I'm just saying things happened against conventional wisdom in oil prices, because oil fell while it had to rise, and even the most important players in the world were not able to influence that. But for a trader, luckily, it doesn't mean a thing. For a trader, it simply means you have to look at your risk management plan and your ability to ride the trends. Seems easy, right? Well, if you could trade that into practice without messing about your opinion and your ideas that you know something better than others, you will be fine. But if you want to prove your ego, your trading career will end badly. Facts. So, thanks for this video, and wait for my next videos, and of course, make sure you are following me and subscribing me. Thanks.